Okay, what's going on? Good evening. Today is Thursday, July the 16th, 2026, and what we're looking at is going to be the dollar index, um, the futures markets. We're going to focus mostly on the bias that we had for NQ today. Let me turn this down because it was so loud on the video yesterday. We'll focus on mostly NQ and the position that we took on the stream with the Discord this morning. And then I'll talk about the overall bias of, like I said, the futures market, ES, YM. Talk a little bit about what we wanted to see when it comes to Tesla, some of the stocks, and then obviously oil as well. So I'll come right back to this, and then I'll go through the dollar bias really quickly. Um, Looking at the dollar bias, this was yesterday's open. I guess this would already be, or excuse me, this would have been yesterday's open here for Thursday. And so we'll see how price reopens back up. But let me make sure and refresh this to make sure that, because I had basically had like a weird connection issue on this window earlier when I got back home. Okay, so make sure we got the weekly, daily. Okay. And then we'll stick with 1 hour here. Okay. So bias for me today was wanting to see weekly, we've been looking for that 102 level to deliver and possibly like it continue to break out and make higher highs and higher lows. But since we're starting to see price come into that 150, we've started to see liquidation and started to see kind of more of like a sell off, lower low, lower high, lower low, lower high, lower low, potentially lower high situation coming. And so, why I wanted to see more upside as well when it comes to like our futures or indices is I wanted to see this possibly break down to that $100 psychological level. And so when you look at the open from yesterday, all we did was make higher highs, higher lows, higher highs, higher lows, and just make our way up gradually bullish. And so as we made ourselves bullish, that's kind of why I do believe we did see some liquidation and then also the locations of where we were when it come to NQ. Okay. So bias was, like I said, to see it come down a little bit more, ended up getting a bullish day, which ended up, I think, pushing us a little bit down on what we trade. Okay. Now the overall, let's look at just NQ today. I'm not gonna go through all the stuff I was looking for like YM and ES, except for the intraday, but like the higher time frame we talked about on the stream, potential range areas, right? 4 hour zone here, 52,550 for YM, 75,550 for ES, and then us coming down potentially into um, essentially this zone here, right? Like coming down here to 29,000 or 29,100. 29,000 is kind of like that major target, I think, for the downside moves for NQ. So going to just NQ, like I said, before we got on the call this morning, all you could see was the overnight price had sold off. We had come into New York. This was 6 a.m. going into 7. Bodies were closing lower. They were attacking towards the week low. They were attacking already at 6 a.m. going into 7, the previous day low. So price was already confirming bearish. Now, as we come into 8 a.m. going into 9, that's when we get the fireworks, right? The equities open. And so that's what I'll go and break down the move of what we wanted to see. Now, when I started looking at this personally today, let me make sure I've got the right one again. This needs to be. When I started looking at this today, my thought process was, well, if you already are starting off, right, with the market here and then selling off, right, and you've already sold off from, 700 level down to 500s over 200 plus handles to where it was closing here, like 400s. Okay, so 700 to 400s. And then this candle here, right, being a body closure lower like this here with no signs of strength before equities was already showing me that the range had pretty much was making that completion down to the low of week, okay, and possibly through the previous day low. So for me coming into equities open, I wanted two things to happen. Either we were going to respond under market open inside demand of 29,400, or we were going to go ahead and slip the low, right? Grab the liquidity of the week low, and then you would see shorts cover from internal range from and the external, excuse me. And so seeing that, we'll go over to, or I'll bring over the 15 here really quick and 5, and we'll break down that New York price. But overall bias, like I said, was if we did roll down to the downside and we broke this this week low here, as you can see here on the left screen here, you can see the 4-hour candle I talked about, which was the demand candle, the discount zone. That price could coming into Friday, excuse me, I can't even talk, sorry. Coming into Friday, that we could come down into this level like 29,000 and then 29,000 whole level. Okay, so this is like 29,025 and then like coming down a little bit lower, get you into that 29,000. So I talked a little bit about what I call a Dorito pattern. They were starting to form this like Dorito, right? And price was continuously holding up off of this daily demand candle here. But when you really think about the swing of things, like I talk about a lot, is like we're at an area where the market moves in 4 phases, and it feels like this was the low. We played a CFD position where we bought up in these weeks here, and then we were able to close most of that position down and let runners run for some crazy runs. But now when you think about that, like that's the midpoint of this range. This is more of like a distribution pattern, right? So it only moves in 4 phases. So markups, right? Higher highs and higher lows. Price goes sideways and starts to distribute and go down, right? And then price will mark down, right? One of the other phases, lower lows, lower highs, and start to break until eventually it gets down into an area, right? From marking down to where it needs to come into an area like this, excuse me, come into an area like this after marking down, hits an area like a demand, and then it starts to mark up, right? And then what does this end up being in this zone will be accumulation. So price likes to move from one accumulation markup to a distribution, right, to a mark down, right? So it's just the order flow, the flow of things, okay? And so by seeing this from a higher time frame perspective, that's what's got me really thinking like we could see that Dorito break, especially if we start to break this level here. If we start to break this level here, I think we could really start to find our way back down, possibly to some of these inefficiencies on the way up, and then we'll see how violently and what news comes out and different things. But it does look like with that daily, closing yesterday, looking at the line graph, right, that is definitely a sign of weakness that if they take this low, we're at a free fall. Okay. Now, let's go back into smaller time frames, but after I also like to talk a little bit about oil. So we've talked a lot about oil coming down on the streams into the $70 a barrel zone, right? And then responding. So seeing shorts, a lot of people covered those 102s. There's a lot of people who shorted like up in here in these 102s, and then they covered when they got down into that higher time frame demand. I know a lot of people that made a lot of money in that situation. Price ended up covering, and or individual short started covering, and price started to pop and kind of show signs of strength. They came up to 96, failed, and rolled over into our higher time frame fair value gaps that we were looking for, and now you're starting to see potentially shorts cover off of that move from last week. Okay, so we'll see how the rest of price presents, but with this pushing up as well, that also could be another factor of why we're seeing that liquidation. Okay, so let's bring over the 5, or the 15 and the 5 for that New York. Okay, our focus will be, where was that actually at? Oh, okay, right here. So this blue line obviously is New York. I'm going to move this one because I was actually utilizing it for something else during that time. Now, at the open, it was pretty legit sell side move. I will say, like I was thinking and identifying a sell side move. Let me move the 1 minute over there too really quick. Okay, let's look over here. Okay, so we'll go in here now. 1 minute on the right, 5 minute here on the left. Okay. Now, for me, I don't like to force shorts equities open. This is something that I don't like to do because a lot of times, just like a buy position too, they'll clean up inefficiencies on the way down. And so you really have to have a really good location on your sell side entries for it to work out. Now, for me, at the equities open, I did like the potential to see the sell side move down through the current low of day. Okay, because if you think about it, at what all you could see at one point, right, was this. Okay, so right at equities open, the first 5 minute bar, 8:30 to 8:35. That's all you could see, right? Was a run on the highs, the manipulation, the fast move here on the 1 minute. And so for me, the only thing that I thought that they were going to do was reach for that 29,350, and then we could see some short covering, right, when we're looking left to get right, because the overnight players were already up so much that it made sense to see possibly a move down. I guess it won't do the replay mode right there. Okay, yeah, it does. It does. It does. Okay. So like for me, I was like, maybe we see that move down through those 350s and through that low of day. And if we see that, okay, then I would definitely like to see a move back up. Okay. Let's go back to 5 minute here. And so first 5 minutes they do manipulate up. And so why does a 5 minute wick form, right? What does it look like on a 1 minute? It usually is going to be this FU formation or Eiffel, excuse me, not Eiffel Tower, but the Empire State Building type of situation. It'll form just like that at the top and then it starts to break down. So when you're starting to see this, right, that first 5 minute close, and then you get 35 going into 40, I did like after that sign of weakness. I did like to see potential to the downside, but it just wasn't identifiable. I couldn't identify as I was going through the sequences. Okay, so 834, you get the capitulation down to 835. This is where they're going to have people most likely, I would think, chasing the market, right? So they're probably not selling inside the supply like we teach, right? Or selling, right there in that first 1 minute inversion, something like that, they're probably selling at the breakout, like right here, right? Trying to form a position like that. And so like they'll sell it like right in here. So like, for example, it'll look like this at one point, and they're selling it on the fall. So like they'll try to sell it just like this, but now as you can see, when you're selling that on a 1 minute type of situation and you're not focused on having your order above New York open and bearish conditions, et cetera, then you're actually positioning yourselves inside of expansion fair value gaps on 1 minute. So why does it come back up, here in just a second? Starts to show them a little bit of profit, right? Like actually it goes past 2 times their risk right here, right? But why does it come back up and fill this inefficiency? Because they know so many people played that with late eyes. Okay. And so bam, it comes back up because they probably already condensed their risk down, right? Because they were at 1 to 2, right? And they've probably already condensed their risk down to nothing, break even, and then it comes and takes them out and rolls to the downside, right? So you have to let these things play out, and you have to think in probabilities. Okay. Now this is a reason why I'm showing you guys what I didn't personally want to take the short, because it's difficult to take this type of trade unless you're focused, like I said, on positioning yourself above opening price in the bearish condition. Why do you want to do that? Now look left, okay? Really quick, look left. I focus all my entries, buy side or sell side, based off supply demand framework, okay? So I want to frame my trade up and I want my entry to be inside the red, okay? Now, if I just take the entry where I showed you, that's what gets me stopped out. But if I take the entry where I show you to take it, right? Keep looking left, right? At New York Open or above, that puts me in the proper location to be able to take on a spike move, right? Because I would have been still in with the spike move being in the proper location to take this trade down through the low of day. Okay, so if you think about it right here, let's watch these next couple candles. Right, you're still pretty good here, and now price is delivered. Now, since structure has been broken, you can reduce down your risk, trail risk, etc. Okay, and so I think they're good sells, but that's going to be the difference maker is your location. Are you inside of the 5 minute supply here, right? And are you above the point of interest at the right time? Okay, so those are two main factors I would say on that sell side move. Now, as it starts to sell off, okay, into my hand, that's what I'm looking for. Because if I'm not going to force, or if I don't feel like it's an easy layup type of short, I know that those individuals are going to give that position back fairly quickly. Okay, so we ended up going through, as you guys can see here, we ended up going through delivering the 29,350, and then this dotted line here was the week low. So we ended up delivering the week low. Now, we like to take trades in the first 15 minutes of the hour or the last 15 minutes of the hour. Okay, so after the smoke had settled, right? Like equities open, it falls off. This is now 8:45 going into, 8:45 going into 8:50. Now, at this exact moment, nothing has presented on the 5 minute, in my perspective, okay, to make me want to take a trade, because I talk about this all the time, right? You don't want to catch yourself trying to buy a falling knife, and you also on the buy side and on the sell side, right? You don't want to find yourself trying to guess a top, right? Like when people are going to sell or when buyers are going to liquidate. So there's certain signs and certain signals that we look for, which are timing, right? And price action candle closures, right? So at this exact moment, okay, this is where timing met up, sign of strength candle, 850 to 855. Now, what made it difficult and why we took one scratch before the dub was because of how they ran the 1 minute price. We got our signal, right? Our mind immediately tells us, doesn't tell us that, right? Our mind immediately tells us, where's our target? New York highs, New York open, right? These are the New York highs. So, for you draw a line down the middle of the sign of strength candle, okay? Now, on the right side, can you identify, right, in the right time zone, a 1 minute mitigation? I was personally liking the area 29,282, so I called out, right, as we started to push back down into this 855 zone, I started to call out buys in this zone. Now, as you can see, I positioned off of this candle, putting my risk at the low of the market at the time, and it did spike me out, okay? But let me move this candle here really quick, or this replay mode. But now, as you can see, I know that's the area because of the 5 minute sign of strength. Because I lost the trade here, just one scratch, I knew that the way the price was still presenting, that we were in the right area. So I retook the trade, okay, which was I think around 29,300, 29,302s, okay, with a 20 handle risk. And I was attacking back up to where? 5 minute supply. Like really, I just wanted a 5R trade, right? Right, 5R trade, but I was attacking back up to the 5 minute supply and what? New York Open. Okay. And so New York Open was here, and that was for like a 7, almost 8 times our risk type of trade. Right now, we shaved most of our trade right here in this area, and then we left a runner to potentially go for 29,650, but it never happened. It ended up coming back. But most people were done right there in that zone. So just kind of show that here for the Discord. Okay. This was the trade. Um, this was a trade from the live trade chat, right? This is 907. You can see here at the top. And you can see here, this is where we took our first trade, right? Like I told you guys, took that first trade, everything lined up, had the signal, everything was, criteria, just lost the trade, okay? Then after the draw and liquidity, which is even better, it makes the trade even better, right? We ended up taking, as you can see here, right, 302s, right? It's just showing my risk in front of it, but 302 was our entry with a 20 handle risk. And then we were shooting for, like I said, back up to supply, back up to market open, New York open, basically just back into where the sellers were. Okay. And so beautiful trade that ended up completing up. We had a beautiful day off of this, even with the scratch. And so that was an amazing trade. Okay. And so that's what I gave out today when it comes to the live trading chat. Now, there was something I had later on in the day that was just like a bounce play, but this play was, I was able to manage it and protect it and stuff like that, but it wasn't the best of my plays, right? Like just from the idea of it and then just the stalling of everything, but still was able to manage it pretty well. And yeah, so I think the best play, like I said, was the one that I gave out today. Other people were able to catch some of these trades. My good friend Derek was able to smack ES at the same time. We were looking for essentially price to break out of that area at 9 and reach back up for daily open. And it definitely did that. I believe it ended up reaching right for daily open, top tick in the area and then falling over. But he was definitely able to get a solid location here, solid trade, and probably easy management, I would think, at that. So really great trade by him on that. Okay. And so what else is there? Okay. So yeah, so we left that runner. No, that's what I was going to show here is we left that runner, and this is what essentially it looked like once we left the runner. So we pulled off all of our contracts that we had. Looked like I had 4 to start, and I pulled off 3. And then I had left the runner and was wanting to see if price was going to extend up through that New York high or possibly through that 29,650 level, especially the 550 key level. That would have been really key, just getting through this New York high. Okay, so beautiful trade. Let me look at and see here really quick. And so yeah, so everything lined up, okay? Timing, locations of the trades, right? Positioning, right? And then playing and executing up to these specific levels, right? That we know get these specific responses, all right? So I hope that helps out. Just kind of see what we ended up seeing today. And then looking at the rest of the day, let's go ahead and look at that just really quick. We're going to be doing a call here with the team in a little bit. Obviously, we're very bearish I'll talk a little bit about the stocks and stuff too, but very bearish. I talked about that Dorito pattern on the higher time frames. We'll see how we respond in here, getting below possibly 29,000 if we can touch 29,000 tomorrow. But we'll see how we respond inside this 4-hour demand. If we start to really break down, we could get pretty crazy down to these wicks. But I would love to see a breakdown in the overnight, because that means overnight shorts are in a profit, and most likely they're going to cover their position at a New York Open. Okay. Now, if we see buyers start to, set in here and shorts start to cover from a higher time frame area of the week, then we might see that overnight push, and that makes it a kind of annoying, because then they start trying to fleece us at the New York Open. Okay, so did I want to go over the ES at the same time? Let me look here really quick. I do want to go over the ES really quick, okay? Because it was a beautiful play as well. And I want to show the timing of, like, when I'm calling out an NQ trade, how you could be taking an ES trade, okay? Now, ES had very clean double bottoms, okay? Like, I thought these were relatively clean, okay? So I'll spend the next 5 on ES really quick. So, really clean, okay? And then now, let's look here. This is everything, right? Wednesday open, got everything. Thursday open. Let me move the Wednesdays open here. It's not confusing us. Okay, so New York Open is right here. They pushed down. They drew on the liquidity. Now, as you can see here, it's relatively in that same area. Now, what is the sign that we see? We've seen the 5-minute sign of strength, 850 to 855. Look at ES, guys, at the same time, 850 to 855. Okay. Now, when I give out trades, I give out the same targets essentially that I do on NQ. I want that New York high, right? Like right here, I wanted New York highs. They never delivered on NQ, so that's something you can see on the divergence. But I wanted that New York high where sellers would have put their risk on ES, and then I wanted price to possibly poke into above daily open, right? So it'd like reach out and break above here first, and then maybe fall. But it ended up just poking right into it. So 5-minute sign of strength. And then what I tell people on ES is to risk 5 handles, right? So 5 points for 15 is your 1 to 3, and 5 for 25 is your 5R. Okay. So let's break down a little bit smaller time frame here of ES. Okay. Now, after you get the same thing, so this is really for my ES traders, Chris, Derek, you guys, okay? Same thing. After you get the 5-minute signal, okay? And if you play it a little early, you can definitely do that. But the 5-minute signal, the first target is the New York high, all right? So you draw your line down the middle of that candle that takes out traders. So you always want to have a trade that draws on liquidity, takes out traders. We knew that they had been swept here, right? Then this candle prints. So all you can see at this exact moment, right? Once this candle prints and shows you the signal, now you're ready to go. Now you're thinking, as soon as you get the signal, it's target, and then where's my risk to entry gonna go, okay? And so let's make sure now that we draw that line down the middle and it shows up on this 1 minute. So think from target, New York highs, all right? And then on the right side, can you find something, risk to entry, okay? And so now it's all, the entry usually comes no matter what, ES, NQ, YN, doesn't matter, in the second candle after your signal, okay? And so let's see how this candle prints. Now you see how it just taps into the area and then goes? That's the manipulation second candle. I love this type of situation, especially if it has a draw on liquidity, okay? And so if you're taking this trade and you're looking at it from this perspective, I would say a 5-point risk. Let's say you're taking it from here, right? So like right when that 5-minute candle is closing and you're starting to see it like start to, go up, 5-point risk would put you, so think from risk to entry. So 5 points from here, let's do this here. You'd be wanting to get in somewhere around that zone right there, I would say. Like if you could get in when it's actually filling the 1-minute FEG like this and tapping off that area and really frame up the 5-minute candle, that's your best bet, okay? Because most people, they're going to take the trade, most likely they're going to take it before the signal. They're going to take it like right here, right? It goes up and then they're like, okay, good, I'm doing good. And then it comes back, starts to feel this imbalance. They get scared and they get out, right? So wait for the 5-minute signal to close, right? And then as soon as that candle closes, your focus needs to be on your entry candle, which is going to be the 5-minute candle that takes out traders, okay? So now when you press the buy button, you want to make sure price is relatively in that area, okay? And so let's say you framed up a 5-minute play. It looks like that. See how good it would look on the 1 minute? Most likely when you start off, it's not going to be that way. It's going to be more like this on the 1 minute. Okay. And your risk is probably going to be in that low. But now let's look at a 1 to 3. Okay. A 1 to 3 gets you back above New York Open, right? So protect or pay yourself above the open. So maybe if you didn't even get the delivery of the highs, you still had a 3 times your risk trade. Okay. Now, the reason why I really liked the continuations on NQ as well as ES is look at the highs on ES here. Okay. They also left double top highs. So not only was it New York sell side liquidity, it was like an easy area to see that if you were to just deliver through here, you were looking at like 4 times your risk on an ES trade based on the way that I give it out. Okay. And so beautiful trade here that also aligned at the same time with our NQ. And then it really helped out, I would say, now that I'm looking back at it with the divergences and what to expect when one asset's delivering liquidity in higher time frame zones and the other's not. Okay. And so thought this was a beautiful play up if you're able to catch something like that. I mean, you don't need very much more than that. A mini contract on ES is $50 a point, so you're risking $250 right there for $1,000, and that happens in about 15 minutes. Okay, and so same concepts that I teach. If you guys have any questions, I know I show a lot of stuff when it comes to NQ, but my concepts work on NQ, ES, and YM, because those are the ones that I've tested the data on all three. Okay, so I'll leave it at that. I'll see you guys on tomorrow's session for New York, and hope you have a great day. Now, one last thing I actually want to say is before I say have a great day is we were right on our setups like NQ today. We were right on like what we want to see price action wise. Okay. But we weren't right on the direction of the market because once we took profit, just like the day before, it rolled over and continued down. But what I will say is there's nothing wrong with that as long as when price is moving in a specific manner that you're executing in the way that you want. Okay. And you're able to produce a profit based on the time that you're in the market. Okay. So beautiful times to study. There was a lot of manipulation on NQ compared to ES for me in my book today. And it was a lot easier to identify as you look, like I said, at ES 5 minute, 1 minute, that they had a draw on liquidity, timing, target, everything was really, really nice on that. Okay. So again, appreciate you guys. Study these times, study these areas, and I'll see you guys on the New York session call. Have a good day.